Hello, everyone. This is Steve with Aptera Owners Club. A few days ago, Aptera released their SEC report filing for their annual report, and I've had a chance to look through all 43 pages, and I thought we might peruse this together. This is kind of going to be a long video. We're going to hit the highlights. Okay, so let's get started. This is talking about their business, and they plan to begin the earliest deliveries in late 22 and ramp production in 2023. So that's what we've all heard, and that's what we're all hoping for. They believe that their resin infusion technology and their composite shell has advantages over steel stamping because it has lower manufacturing costs that uses inexpensive and simple tooling, fewer robots, fewer people, no welding, and so rapid and inexpensive scaling because of their additive manufacturing, reduced parts and weight, so that's a lot less parts. We know about that. And then it's the shell is very light, so people can position it without using robots. So less labor and less space because they're doing these modularized build. Remember, they're going to have like 6 large subsystems that just get bolted together. So that's their plan, and that they believe that that's their kind of competitive advantage. Um, the distribution plan is similar to Tesla's in direct-to-consumer sales, online promotion, regional pre-delivery warehousing in lease facilities that requires less warehousing and things like that. And then Southern California rollout initially with major metro areas soon after. So we know, and as we long suspected, they are planning on delivering vehicles first in Southern California and then probably expanding most likely west to east. And then mobile service house calls. So they're planning on providing some mobile service units. Here's their beta render. And then this is their specs. We know about this. This hasn't changed. Their pricing still remains the same. And then expected delivery 2022 through 2024, depending on order timing and configuration. They are talking about the safety pilot with level 2 autonomy. There's enhanced audio, some tent that we've talked about before, and their environmental impact. They think that the potential market is about 600,000 units per year. They currently have 18,000 pre-orders. That's at the time of this writing. This was written a while ago. We know that they have well over 20,000 pre-orders at this time. They're talking about their competitors and how they're talking about the regulatory environment could change. They currently have 89 full-time employees and 14 part-time employees. I believe they have more at this point. And then they have 9 patents. They filed for 9 patents. All right, and then this is their executives. So they list 3 people as their executives: Chris Anthony, Steve Fambro, and Janice Burlingame, who is their CFO. And the directors are Chris, Steve, and Brian Snow. Remember, he's the venture capital guy that we talked about before. And then this is some background about Chris and Steve and Janice Burlingame. We've talked about them as well as Brian Snow. Then they talk about how Michael Johnson was one of their early investors. It looks like he borrowed $300,000 from them in March, and then he paid it back in July. This is talking about all their risk factors. So things that you need to know before you invest in them. They have a limiting operating history, and they have not generated any revenue or profits. That's nothing new. Their auditors issued a going concern opinion. They do not have enough funds to see the company lacks significant working capital and has only recently commenced operations. So the going concern is that they may run out of money if they don't receive more funding. COVID-19 may materially impact our business. This is kind of boilerplate. I think all companies say this. Company plans to raise significantly more capital, and future fundraising rounds could result in dilution. So we talked about this in the investing video. But if they issue more shares, then each share becomes worth a less smaller proportion of the company, which we all understand. company operates in a capital-intensive industry. So they're a manufacturing company, and that requires capital. It's not like a software company where you just need like computers to code. They actually need a lot of equipment, space, that kind of stuff. So far they have not had to do any loans, but if they do loans, they might have to pay a high interest rate since they're kind of an unknown startup company. But they've not had to do loans. They've been using crowdfunding this whole time. It's a highly competitive market. We know that. There are significant technological and legal barriers to entry. We know that. And their success is dependent on people's willingness to adopt these vehicles. The Aptera is weird in a way, and it's not conventional, and people need to be willing to take the trade-offs for the advantages. They need to think that the advantages outweigh the trade-offs of that vehicle. There are regulatory hurdles that they must meet, and these motor vehicles are highly regulated. We know that. Demand is volatile. Right now, demand is great. So if they had vehicles out now, they'd be doing really well. And there may be liability claims because it's vehicles can be can cause car accidents, and that's significant liability. All right. So they keep going on about the different risks that they have, and you should peruse them yourself if you're planning on investing. And then the interesting things I wanted to look at were these are the things I didn't quite understand. Like, I don't know if they actually have all these shares. I think, or they have potentially this number of shares, because this number does not add up to 100%. If you add up this, and this, that doesn't add up to 100%. And like all executives as a group, I'm guessing that means these two together. That does add up to that. So Chris Anthony and Steve Vanbro add up to this. So if you add up this, and this, does that add up to 100%? Perhaps. But then they say that right here, the calculation is the amount the person owns now plus the amount that the person is entitled to acquire. So it's not that they all acquire. That amount is shown as a percentage of the outstanding amount of securities in that class if no other person exercises the right. The result is a calculation of the maximum amount the person could ever own, which is why the amounts in this column may not add up to 100%. Okay, so as we know, Michael Johnson, he is a realtor, and Patrick Quilter, if you Google him, he's a guy that makes like guitar amps and stuff, and he's one of the major investors, and he may be involved in this enhanced sound system that they're putting in there, but he is a major investor in the company. So they're talking about how much. So the things that we're buying as non-insiders are Class B shares. They are non-voting shares. Otherwise, they're pretty much the same. They don't plan on giving dividends, and they're talking about dilution. Something important to read if you're thinking about investing. But dilution just basically means if they issue more shares, your shares are going to be worth less because there's just more shares out there. Initially, they did these SAFE agreements, but if you're investing now, you're not part of this SAFE agreement. All right, here's the interesting stuff. All right, so now we're going to their financial statement. This is how much cash they have on hand, $19 million, which is pretty good. I think that's a good amount of capital. The more capital they have, the more that suppliers are willing to work with them, because you have to have the capital to pay the suppliers. And right now they need to line up suppliers. And if they have more capital, then they can ask the suppliers to give larger initial orders, which is what they need to ramp production quickly. So if you this is their assets in cash and then other property. But then these are their liabilities, and so if you look at their liability is basically negative $61 million because they owe a lot of money to their investors, their initial investors, and so if they don't sell, their investors are getting very little money back, because they're going to burn through this cash pretty quick. $19 million with about 100 employees, that's going to go fairly quickly. This is how they're spending their money. Research and development's $11 million, and general selling and administrative costs were 7.4 million in the last year. So they had a net loss of about $100 million. Now that's perfectly normal for startups. They bleed money until they start delivering products, and that's not uncommon. Okay, so the same things here. There was an interesting thing I remembered here about how much stock options they were giving to their directors, and we're going to get to it. Oh, this is the amount of rent they're going to pay. So they're paying, in terms of rent, about $1 million a year for all their different buildings. I believe they have like 4 or 5 buildings. So this is how much they're paying. Income tax, obviously they have no income, so they're not going to pay any income tax. So that's not a big deal. All right. So this is the stock options that they've granted. They've granted about 10 million stock options at an average price of 3.87. And so if we look at this, you'll see. So a while back, if you bought Aptera stock a while back, it was valued at 380, and then it was 880, and I think it's 920 now. So the stock options they're giving out to most of the people in 2021 was at 380. Oh, that must be in another file. This must be the other file. Hold on, I'm gonna find it. Okay, I found it. This is the other interesting thing. At the very beginning, they say anticipate we will need at least 50 million in addition to the amount previously raised to reach the vehicle production stage. If these sources are not sufficient to meet our cash requirements, we will need to seek additional capital, potentially through private placements of equity or debt to fund our plan of operations. So that's very important. They need to raise $50 million more before they can, in order to reach production. That's what they anticipate. So that's probably they're saying at least 50 million, so way more than that. I'm guessing they either are going to have to go IPO or find more large private funders to gather that amount of money. The other interesting thing I found in this is the stock option agreement. This is Chris Anthony's agreement, and basically he gets an option to buy. So the way options work is you don't get these shares, you have the option to buy them at a certain price. So he gets them at 380 per share. So on July 28th of 2022, he has the option of buying 135,000 shares at that price. And then every year after that, he has an option to buy 135 shares at that price. So if the price goes above 380, then it's a no-brainer to buy those shares because then they're worth more than you're paying them for. Now, the more interesting part of this thing is their option agreement with Janice Burlingame, their chief financial officer. She's getting way more, 1.2 million base shares and 700,000 performance bonus shares. So she has the option of buying 303 shares at the same price, 380. Every year starting August 1st. But here's the interesting thing. If she successfully executes a SPAC or an IPO, she gets another 300,000 roughly. If she gets a valuation for the company of over 2 billion, that's enough. So I think this is probably something agreed upon. Like she probably agreed to this option schedule. So in her opinion, she thinks that this is a reasonable goal, 2 billion pre-money valuation at the time of IPO or SPAC. So she gets another 300,000 shares as an option there. And then uh, fully implementing an ERP solution. So an ERP solution is a enterprise resource planning software that manages a company's financial, supply chain operations, commerce, reporting, manufacturing, human resources activities. So it's basically like a software package that kind of runs the entire operation. So she gets another 134,000 if she does that. And then Steve Fambro's is pretty much the same as Chris Anthony's. And then there was a little thing in here about their agreement to merge or take over Andromeda Software in an all-stock deal. And that's pretty boilerplate, nothing super interesting there. But the most interesting things I found out about this is that they're going to need $50 million, and They suspect that, I think Janie's Burlingame, and she's done this before. She's taken several startups through IPO. She believes that this $2 billion valuation is reasonable, and that's why she would have agreed to this as a performance metric. These are performance metrics that she believes that she can reach, and that's why if they were unreachable, you wouldn't. Why even put it in there? She wouldn't do that. Anyways, thank you very much for watching, and I would like to thank our sponsors, especially our 100 kilowatt hours at Enoch Smith and Brian Bose, and our 40 kilowatt hours, Neil, Curtis, Jeremy, Tom, Dean, Go Climb a Rock, Adimchi, John, Don, Jaron, Paul, Harry, and Paul Reed. These guys have, out of the goodness of their heart, decided to support this channel, and we all really appreciate them. Thank you.